Friends, if you come to know before the market opens whether it will go up or go down today, won't it be a great advantage? Well, you can know that, and I will tell you the magic trick also to know this. So stay tuned to this video. So friends, to give you a simple one-line answer to know market opening and market movement is to track the global markets like the US, European and Asian stock markets and see whether they are in red or green and know how much high or low they have gone. Because Indian markets will also move more or less in similar direction. Not exactly same, but there will be a correlation to the global markets. Let me now explain to you in detailed manner how to track. All the major economies of the world, friends, have stock exchanges, but you need to track stock exchanges of some 4 to 5 important countries only. The first one is US markets, and there are 3 important major indexes in US, which is Nasdaq, Dow Jones and New York Stock Exchange. The US market timings are from 7 p.m. to 1:30 a.m. Indian Standard Time. Okay, evening 7 p.m. it starts in India. So after the Indian markets close, the US markets open, and once the US markets close, the Indian markets open. This is the cycle. So if US markets have closed in green, then it's a good sign. And if the US markets went up by 2 to 3% in a single day and closed in green, then it's a very good sign. Because if it has gone up by 2 to 3% in single day, most likely Indian markets will also go up the next day. Like green, same thing you applied for red, that is if the markets have fallen down. So friends, if you track US markets, then you can predict the market movements in India. Now friends, one word of caution which I want to tell you. Don't just blindly, think that on all days when the US markets go up and close in green, Indian markets will also go up, and if the US markets go down, Indian markets will also tank. No, it's not like that. And you cannot compare the closing of US markets with that of Indian markets on a daily basis. On many days, the US markets can close in red and the Indian markets can also go up on that day, and vice versa also. And it has happened like that many times in the past. But what I am trying to tell you is that if there are some big events due to which there is a big upward movement in the US markets or a big fall in the US markets, like 2, 4, 5% movement up or down in a single day, then on those occasions definitely Indian markets will also move similar to the US markets. Now, what are those events, friends? First one is monthly US inflation numbers, which are published around 10th to 15th of every month. Second is monthly US employment data numbers, which are again published around 5th to 10th of every month by the US government. Then you have the monetary policy announcement by the US Federal Reserve on interest rates, and this depends on the inflation. If the inflation is high, the interest rates can be increased multiple times in a year by the Federal Reserve. Example is this particular year. So these are some of the important events which have a good impact on the markets. There are other data points also in the US like US industrial output data, export and import, etc. But these 3 things which I told you are the important ones which I also track it. So if these numbers are positive, then the US stocks go up and the Indian stocks also follow the pattern. And if the numbers are not so good, markets tumble, crash down. And to know these things, just watch the business news channels, friends, business news channels, or follow them on Twitter. You will get all the information. In the past few months, friends, also in August and September, during that time when the US inflation data was very high, the US markets crashed 4 to 5% in single day, and the Indian markets also fell the very next same day. So the bottom line is follow US markets to predict the Indian markets. Now after US, the other important countries and the stock exchanges which you can track is, first one I would say China, which has Shanghai Stock Exchange, and the timings are from 7 a.m. to 12:30 p.m. Indian Standard Time. Then you have Hong Kong Stock Exchange, the timings are 6:45 a.m. to 1:30 p.m. IST. Then you have Japan Tokyo Stock Exchanges, which is 5:30 a.m. to 11:30 a.m. IST. Then you have London Stock Exchange. Okay, so in these countries, friends, I don't track lot of events which I do in the case of US markets, like inflation data, employment data, central bank monetary policy. I don't see all these things in case of these other countries. I just see their opening and closing, because US policies only affect the entire world, not all these countries' policies. But if something drastic happens in these big economies, then it will have an impact on the world markets also. Like for example, in somewhere in 2014-15, China devalued its currency and the markets tumbled globally. Or if there is some big issue like semiconductor issue which is manufactured like only in China or major production is in China and there is a full lockdown, then also it will have an impact on the global markets. But only big events are not usual routine things. Okay friends, and after the US markets close, the Asian markets like Japan, Hong Kong, Singapore open even before Indian markets. So if the US markets closed on a high of say 3 to 4% and the Asian markets opened on a high, then most probably the Indian markets will also go up that particular day. So friends, this is how I try to predict or track the Indian stock markets movement, or how it will move during the day or during the week. Okay, now that you know how to predict the market movements, let us see the advantages of tracking the global markets. As an investor, friends, you can delay or advance your purchases or selling of shares. Okay, let us understand this. Okay, suppose that for the last 1 or 2 months, the US economy was having lot of issues and challenges, and after 2 weeks, the US inflation data, job market data, industrial output data are all going to be published and released by the US government, and you are aware of all these happenings. Then what you can do? You can buy after the monthly reports or statistics are released, because the report will be negative. So the markets will fall once the report is out, and then you can buy good quality stocks at cheap prices. Whereas if you don't know that next week all this data is going to be released by the US government, you will buy some stocks today and then after 2 weeks the markets will fall. And you will think, "Arey yaar, ye kya ho gaya? I have bought them at a very higher prices." On same case friends, if you want to sell some stocks and you know that after the US economy report comes out next week, the markets are going to fall, then you can sell the shares today itself if you need money. On the other side, if you know that the data or the report from the US government is going to be positive and the markets will go up reacting to that report, then you can wait for 1 to 2 weeks, and once the report comes out, the market will rally and then you can sell your stocks at a higher price. So be a smart and a clever investor, friends. Also, as a trader, same thing you can apply. You can take bullish or bearish stand if you're trading, in weekly options or monthly options, and make good decent amount of money by, tracking all this data from the US. Just one final thing which I want to tell you, friends, is that don't go too much deep into what is happening in the US economy and markets on a daily basis and track them. It is of no use. You will only get more confused. Just follow some of the important 2 to 3 important metrics on a monthly basis. That is more than enough. So friends, I hope you got some useful information on how to track the Indian stock market movements and why you need to track it. Okay, and please share this video with your friends if you found it useful, and support Combrella YouTube channel in spreading the financial literacy. This is C.S.Karthik signing off. See you all in the next video.